Crypto is the next big thing, but it has seen its baby bubble and it does have to crash. And I put a number on that. Why did I get to 3250? I'm marking the same amount of crash for Bitcoin as Amazon, the leading .com, did, 95%.
Hey guys, welcome back to Library of Wealth. Today we have Harry Dent on the future of Bitcoin and the economy. Dent believes that banks will soon write down mortgages because they've been issuing unsustainable mortgage loans to their clients. He says that because this inflation has been artificially created through stimulus over the past 13 years, he's confident that it will be brought down through recession and won't make a comeback as long as no new money is printed. Dent predicts Bitcoin will decrease to the 2018 low of 3250, but the more it moves, the less downturn will be generated. Let's listen to this interview with Harry Dent as he gives his take on Bitcoin and its role in the financial market. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
Here's the classic thing I get when somebody hears my presentation. Oh, Harry, I got 2 houses. One of them's all paid for, and the other one I just got a 90% mortgage. I'm going to sell the one with the mortgage. And I'm like, no, sell the one that you got all the equity and take all your money out because it's yours. Keep the one with the mortgage, because at some point, banks are going to have to write down these mortgages because they gave people mortgage they couldn't sustain. At some point, you got to write down the debt instead of just having more stimulus and keeping the crazy game going. This inflation should not last long because it was artificial. This is not real inflation. The inflation of the 70s, my indicators explain that and predict why it went down in the 80s and 90s. It wasn't government policy. It wasn't government deficits that caused it. It was the baby boom entering the workforce in great numbers at great expense and low productivity that caused the high inflation. It was real inflation caused for real reason. This is totally artificial from the over stimulus for 13 years now, and especially the overreaction, 10 trillion in stimulus in 2 years. That's why we have this is short-term inflation. A recession will bring this down. We come out of this recession in 2024-25. Inflation is not going to come back substantially with it. It may go back to 1 or 2% at most. Inflation is a thing of the past as long as governments stop printing money exponentially, which I think they're going to lose credibility and have to stop doing that. My forecast, and this is just best for you, it could be 10,000. My bet is it's going to go to simply the 2018 low after the last bubble crash, okay? That was 3250. So 3,000 to 4,000 is my target for Bitcoin. At best, it goes to 10. So we're not bottoming here at 20. Everybody think, well, now you buy. No, you buy it at 20. If it goes to 10, you lose another 50%. If it goes to 3250, you lose 70, 80%, okay? So you got to remember, the more it goes down, the less of a downturn it creates to have a big percentage loss. So it's still dangerous. It hasn't bottomed yet. It takes a couple years for a bubble like this to burst. And crypto is the future. I'm extremely bullish on crypto and digital currencies and money creation. It's a whole new money system emerging. It's in its infancy. It's having its baby bubble where it's get overvalued. It's got to crash. It's got to go from 40,000 coins down to some reasonable number, like whatever. You know, it has to shake out. The .com industry did this. Amazon was a small company when it bubbled up in the late 90s and then crashed. Tons of .coms went under, and the strong like Amazon came out and went from $6 to 3,500 in the next boom. So I am extremely crypto is the next big thing, but it has seen its baby bubble and it does have to crash. And I put a number on that. Why did I get to 3250? I'm marking the same amount of crash for Bitcoin as Amazon, the leading .com, did, 95%. It might be 90, okay? Maybe it's 6,000, but if I had to bet, I'd place my bet. I'd be buying Bitcoin if in the next year or two it hits 3,000 to 4,000. I'd be pumping it up because I see Bitcoin going to 500,000 to 1 million in the next boom.
Dent believes that Bitcoin will not bottom this year because of the size of its bubble. He's extremely bullish on everything to do with digital currencies, but it needs to reach maturity by crashing down to an affordable price. He says that gold will decrease, but will do better than any other commodity. Both Bitcoin and gold will probably crash before anything in the stock market does.
I'm saying gold goes from 2,000-ish down to 900 to 1,000, okay? that will be a lot better than stocks and crypto and other commodities. So gold I'm bearish on, but I'm less bearish on gold than most other financial assets. So if you have to have a little gold for diversification, it won't be the worst place to be. I say I don't want anything that's going to go down. I am projecting gold will bottom somewhere between 900 and 1,000. If anything, I think stocks don't bottom until at least the end of 2023 and maybe into early to mid 2024. If anything, Bitcoin, and particularly, Bitcoin and maybe gold will tend to bottom earlier than that. They are the bubbles, especially Bitcoin is the lead bubble. It will tend to crash faster and hit that bottom and tend to lead coming out of it. So I would say Bitcoin will see maybe 80% of its losses by the end of this year, or say early next year, January, February, and will, if anything, bottom several months before stocks. Gold was a safe haven. We were an inflationary economy in the 70s. Gold is a hedge against inflation. That's what it's correlated the most with over its entire history. We're talking a deflation of an entire financial asset bubble like the 30s, and gold was fixed back then. So I can't say, see what happened to gold back then? Gold was fixed. So gold didn't go up, but it didn't go down much because they fixed the price. Gold should do what it did in 2008, just deeper. Gold went down 50% at the end there, or I think 45%, most of that in a couple of months. It was the last to fall, but it went right with everything else. I think gold's going to be down more like 60% or more this time, but it's still less than other financial assets. Treasuries are the safe haven. And again, the longer term the Treasury, the 30-year Treasury is going to go up a lot more than the 10. TLT is the easiest to buy ETF, and that is a mix of those two, 20-year average. ZROZ, Z-R-O-Z, is leaning more towards the 30, so it's a 25-year average. The best thing to buy is 30-year Treasury bonds, but the easiest thing to buy is ZROZ, and that will go up more, about 50% more than TLT. So the long-term Treasuries are the only safe haven. AAA corporates are next, but why buy a AAA corporate when a Treasury bond is even safer? If the U.S. government can print money to keep a bubble going, they can print money to pay off their bonds, and they will. They will not default on that Treasury bond. I don't care what happens. I think we're headed for a digital global currency system where Bitcoin is most likely to become the standard once it is universally accepted, much more value, $500,000, $1 million coin. There's a price, about $500,000 a coin, where Bitcoin becomes worth more than all the gold in the world and can continue to grow with the global economy, where gold is growing at 1% a year, global economy is growing at 5%. Gold cannot be the standard, so it'll be a digital system. Maybe the dollar is a big piece of it, or maybe there's one, but Bitcoin will be the backing eventually, not the U.S. dollar. Here's the thing: U.S. has been the dominant country. We still have better demographics and grow a little more than Europe, but we go sideways. All the growth from here on out is going to be in the emerging world, number one, and more than that in Asia. It's all going to go west. So there's no way the U.S. dollar can continue to be the reserve currency for a global economy that's going to outstrip the U.S. and make it a smaller and smaller point. It's natural that the U.S. dollar in some way will not be the reserve currency. It may be part of a basket of currencies that becomes that with Bitcoin as a standard, or it might just revolve around digital currency. That gets more, but it is going to be more digital, and Bitcoin's more likely to be that standard 20 years from now.
Dent states that gold is no longer a protection against inflation. There has been a massive deflation in the entirety of the gold asset bubble, and gold's value will continue to fall dramatically. He believes that treasuries are the newest hedge against inflation, with AAA corporates as second best. Dent says the smartest thing to hold on to is treasury bonds, but the simplest is ZROZ. He feels that we're coming towards a global digital currency system, with Bitcoin as the standard, which will continue to expand with the economy. The US dollar will begin to go sideways and lose its position as the reserve currency, but will continue in correlation to Bitcoin. What do you guys think of Harry Dent's opinion on Bitcoin as the new global standard? Let us know in the comments. Guys, thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.